Good morning to everyone out there on YouTube, and welcome back to the channel. Today we're going to be talking about market structure breaks, okay? What to look for, how to identify them, and is one better than the other? Meaning the fact is that did we get a clear break of structure either to the upside or to the downside, okay? So let's talk about that. I'm using a higher time frame, not too big of a higher time frame, but this is my 24 range chart. The reason why I chose this is because you'll be able to see the market structure breaks a lot cleaner than it would be if we scale down to, say, a 12 range chart. The lower the time frame that you are looking at, you're going to get a lot of chop. Okay, so this kind of filters out all that chop that you may see in the market. So if you're a beginner trader, this will probably help you out a little bit better, a little more. But I want to talk about, how can we identify these market structure breaks when we are trading, okay? Not so much how we actually trade them, but what to look for, okay? So let's talk about it. I'm going to show some examples here and talk about or give you some tips on what to look for, which I classify as clean execution type breaks of structure in the market, okay? So what we see here on the 24 range, this is a market structure break to the downside right here, okay? Now, what you see here is that the market pushes lower, pulls back, kind of chops around, and then breaks lower. What we want to look for is the break of structure to the downside, okay? Meaning price took out this low right here. When you're looking for market structure breaks, you're looking for price to either take out a high or a low, okay? Like right here, it took out a low, all right, on its move or continuation move to the downside. All right, what the very next thing that you want to always keep in mind is this right here. You want to keep in mind the fact is how powerful was the move to the downside, all right, meaning how many candles did it take for price to push the downside after it actually broke through structure, okay? It took out structure right here, okay? Now we see this candle, the first candle, it broke this area or this low right here, one, okay, it's one candle, two candle, and then followed up, you got a little swing here with more aggressive selling to the downside. So you have to remember this. When price is breaking structure to the downside and it's moving pretty quickly, we want to see that. We want to see aggressive selling either taking out a high or a low. In this case here, it's taking out a low. But what I look for is I want to see at least 2 to 3 candles, okay? All right? Where price breaks through or takes out, in this case here, break structure here, takes out this low to the downside. So we got one candle, two candle, two solid bearish candles pushing the market lower here, okay? All right, as it broke lower, all right? Followed up with a little bit of more aggressive, you got more aggressive selling here, coming out with a little swing to the downside. But this was all aggressive selling to the downside. Now, that right there helps me. I got the low broken, okay? The market structure break there. I got two solid candles that took out the low to the downside, which tells me there was aggressive selling that took place there. I want to see, aggressive or powerful move breaking, okay? Now, the very next thing I want to see is this right here. I want to see price move away from the area and not immediately return right back to it. Meaning, price breaks this low right here, say one candle, and then immediately retraces back up. So we'll take I'll use this arrow line right here, meaning it does something like this. Barely breaks right here, and then just returns right back or retraces right back. To me, that's not a powerful enough move. That's what I classify as what's known as market manipulation in a sense, where, they push the market lower to break through a low here, okay, but only slightly just to retrace the market back. There's not enough there for me to really be interested in taking a trade from. We're too close at that point all the way back to the low, already back to the low right here. So price barely breaks, pushes or retraces back here, and then rejects right here. We're right back into the low, okay? So to me, that's just not a good enough area for me to be interested in trading from. I want to see a strong push to the downside, okay? taking out this low, meaning I want to see several candles that break past the low here. And then what I want to see is, so basically the longer that it takes for price to move back to, say, a key area, okay, a zone, this case here, supply, the better you are, the more opportunity that you actually have, all right? And then, you know, what we look for, of course, when price returns to the zone is what? A break of a candle in the opposite direction, right? But you want to see, like I said, that aggressive selling to the downside, the market structure break, followed by at least 2 to 3 candle breaks to the downside or more, taking out the low. And then the longer that it takes to retrace back to the area, basically what it's doing in a sense here is kind of building up liquidity back as it retraces back to the zone. That is very helpful, okay? And to me, it provides for a better means of a trade opportunity for you to get into, because when price retraces back up to, say, the zone right here, okay, normally what's going to happen is liquidity is going to be built, and they're going to be aiming for liquidity back down to the low. So you see what happened here. Price rejects, it pushes back where? Back down to the low right here. All right, so here's a little break of structure to the upside right here, and it's a little zipper, price moving sideways, but there's a lot of price activity that took place, even the market moving sideways, back and forth pulling, you know, right here before the market broke higher, okay? Taking out structure, taking out this high right here, above right here, right? Above 31. So the market is moving higher, making higher highs and higher lows. There's a break of structure right here to the upside, okay? And look what happens. Again, we get, when price takes out the high in reverse, or the opposite of like we showed where the image where price was taking out the low, the last setup. Look, 1 candle, 2 candle, 3 candle. We get 3 strong bullish candles to the upside, okay? Taking out the high here, breaking through structure to the upside. Now, remember what I said. If price does not immediately return, meaning after the break here and turn back around and come back to this area, it puts us in a better position to look for a trade entry to go long when price returns back to the area, okay? So we got 3 strong bullish candles, okay, moving away from the area. So it takes it, you know, that means it's aggressive buying to the upside. So price took some time, you know, pushing up, all right? Then eventually, as it moves or comes back to the zone here, comes back to the area, look what it's doing. It's low, lower, high, making, you know, chopping around, moving to the downside, but it's forming a base of liquidity to the upside right here when it returns back to the area. So when it finally returns to the area and we get that break of a candle in the opposite direction, we look to take our trade back up to the tops up here, at least back up to this area of this high right here, because there's liquidity resting at the highs of swings to the downside where price was making its move to return back to the area where there was a market structure break, okay? So that's a setup or an example of a break of a structure in the direction where price is pushing to the upside. Again, I want to see not just 1 candle that breaks this area here, all right? So let's say we have 1 candle here. I'm not interested, all right? I'm not interested. I want to see a full candle close, taking out the area, okay? All right? And then followed up with at least another strong, say in this case here, a bullish candle to the upside, or a few more candles to the upside. That tells me that the move was strong enough. If I just see 1 candle break or take out the high here, in this case, then that tells me, and then returns right back, it folds and turns back around, that to me, that's market manipulation, all right? That means that they just wanted to break the area, to fake traders out, to push the market possibly back going lower, okay? So let's see what happens next. All right, so see what happens here. Look, I'm gonna show you an example. Price pushes up right here and starts making these higher highs and higher lows. Another example of a setup to where you can take in a long entry. Pushed up, retraced back, you know, and then it made a lower low here, okay? Pretty much right here. But this is all an attempt to push the market higher, okay? All right? Meaning it made a high here, a deeper retracement, you know, so you got a low here, which I classify this as a higher low to push the market higher to make a higher high, all right? So look what happens here. It breaks structure right here at 39.09 and a half. Got a high, higher low, boom, it breaks structure, right? Look what happens when it breaks structure. 1 candle, 2 candle, 3 candle, 4 candle. We've got aggressive buying there, all right? Now, we have to wait for price to get back to where? To the zone, to the area, okay? Somewhere in the base of the area where price initiated or started pushing higher to take out the structure right here, right? Okay, so it moves higher, aggressive selling to the upside, right? But look what it happens. Does it immediately come back to to an area or a zone? In this case here, we're looking for a demand zone, and there's a demand zone resting right here. But look what happens with that aggressive buying to the upside. Price doesn't come back immediately to so far and tap into a demand zone. All right, so we wait, but that's fine because the longer that it takes price to get back to a zone, the more opportunity that we have for price to move in the that direction going long again. Okay, meaning that it's going to build some base of liquidity as it returns, meaning it starts to make these lower highs, lower lows, swinging down to the downside, and then boom, let's mark a demand zone here because this is an aggressive area or a origination point where price broke through this high right here. Okay, not where it all started at. That's pretty much most times we want to look for see if price will come back down to this area, but it's not always going to do that. It may actually reject at a higher demand area on the upper portion here, right before price broke the area of structure here. So this is the break right here. This is a demand zone, aggressive buying coming out of this area. You can see it right here. All right, but we also want to identify two areas where there are imbalances pretty much in the market as well, and there was an imbalance right here. Okay, so we're going to mark this area right here. Okay, all right, we'll mark that area there. Okay, so mark that area there. Now look what happens. Takes price some time. Okay, what does it do? High, higher, low, high, higher, low, and then it turns and starts making lower lows and lower highs as it's retracing back to our zone we marked, right? So with all that being said, what is it doing when as it's retracing back? It's performing areas of liquidity. Liquidity rests at the tops of highs and the bottom of lows. In this case here, as it swung to the downside, making these lower lows and lower highs. Liquidity, 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 and there's liquidity at the top right here. Okay, liquidity at this major high. Price taps into the zone. All we're looking for pretty much to enter into a trade is a breakup candle in the opposite direction, aiming for or engaging for maybe the first means of liquidity resting back up here, okay? And maybe your second target is going to be here or at the highs right here, okay? But once I get into a trade, if I'm into a trade, say once I get the break, a full candle to the upside right here, price does come back on you a little bit here, okay? And this is off of a 24 range chart, so I'm not saying take your trades off of a higher time frame chart. We're just using this chart here as an example so we can cleanly or better see, those clean areas of market structure breaks, okay? And this video is not so much more about where to take the trade from and how to get into the trade or execute the trade. It's just being able to see the breaks of structure within the market and how to identify them. All right. But anyways, but this is a clean structure break to the upside here because we've got a break followed by one clean candle with the close to the upside, followed with 1, 2, 3, more candles. Okay. So the more candles that follow up, meaning in a bullish direction to the upside, in this case here, we got 4 closing to the upside strong. That's going to tell me that move away as it broke through this high right here was pretty powerful move. So we just look for price to return back to the area because the more powerful the move is, in this case here to the upside, all right, more than likely not all orders got filled, and there's probably going to be some more execution of orders or filling of orders when price gets back to some some area within this zone before price broke structure to the upside right here, okay? And that's where you go ahead and you mark a demand zone and wait for price to see if you get the rejection from that area, okay? And that's pretty much it. As far as when it comes to market structure breaks, what to look for, how to identify them. If price broke right above this area right here, this high right here, and it just wicked out the top right there at the highs right here, I'm not interested, to be honest with you, because it has not given me a full clean break to the upside, all right? And one candle break to the upside is not going to be good for me as a trader. I want to see several more candles because, like I said, the more powerful the move is to the upside as it's moving, and the pace of it, how quick it's moving away as it breaks through that high or that low, that tells me that, all right, they filled orders pretty quick, and like I said, orders probably are resting or still sitting behind and need to get filled. So as retail traders, we just want to wait for the opportunity of price to return back to the zones. Okay, so just want to show you a couple examples. I think I showed two examples to where market structure is being broke to the upside, and then one where it's broken to the downside. So you have to be able to look for those areas on your charts, and that's how to cleanly look for them on your charts and what to look for. Again, you want to see at least 2 to 3 candle breaks above or below that that structure break, okay, and wait for price to patiently return back to the zone. If it returns back immediately to it, pretty quick to it, I'll be a little bit leery about those setups like that, because like right here, it could have broke up here and then came right back. I'm not interested in doing that. I want to see price take its little sweet time, making a move and then retracing back and setting up maybe for some liquidity to be set up to where I could take the trade and try to capitalize on those areas of liquidity. And you can see when price turned back and finally tapped back into the zone, what did it do? It did exactly what it's supposed to do, push higher, taking out all this liquidity right here. And that's what you look for. Okay, guys? That's all I have for you in this video here. If you're interested in joining our Discord, you can find that link down in the description portion of the video below. Click on the link. It's free of charge to join. And that's pretty much it. That's all I have in this video here. I will be posting a trade breakdown. I think it was from my entries from Friday for all those that are interested and who are elite members. If you're an elite member, all you have to do, of course, is click on the membership tab on the YouTube homepage channel. Or you can find the link to the membership program down in the description portion of the video as well. Those that may be asking, okay, what's the membership include? Like I said, it's just a tier-based program that YouTube has created that allow viewers to basically support the content or support the content that creators are make, or whatever the case is. And in doing so, you receive perks and rewards. I have two tiers set up, which is the loyal channel supporter and then the elite channel membership or member tier. With the elite member tier, you receive everything that you do receive in the first tier, plus you get additional perks like my trade breakdowns, which I go into detail about my trades, walking you through the trade setups, what was my process and thinking as I was leading up to the trade and why I took those trades, as well as you receive this, there's member shoutouts, which I haven't done in a while. I need to get back to doing that. Sorry, guys. As well as you also receive the video playlist of videos that are handpicked, because there's so many videos here on the channel. So I went in and hand selected videos that I felt would help, especially a lot of beginner traders out there that are possibly interested in maybe trading supply and demand, but also learning the way that I actually trade in a sense. I'm not a teacher and educator by any means, but it's just my way of being able to give back and post videos and discussion about topics, as well as showing my live recorded sessions so that they may possibly help other individuals. But I do go into detail about certain topics based upon experience of things that I've picked up on and learned, so maybe it helps someone else understand. But yeah, that video playlist is also included as part of the elite membership. So you get the trade breakdowns, the playlist of videos, member shout outs, everything that you do, or which is also included in the first tier. So if you're interested in becoming an elite member, all you have to do is click on the membership tab on the homepage on YouTube, or find the link down in the description portion of the video. It's right below the Discord link, and that's all you have to do. So anyways, I'm going to jump off here and get into some day trading now and get into or active in our Discord community. But I just wanted to make this video today to kind of help someone out there, or show what I look for, I should say that, when it comes to market structure breaks, how I identify what's a good one, what's a bad one, what to look for, things of that nature. So maybe that'll help someone else out. But that's all I have for you guys in this video. Take care, and I'll see you in the next one.